everyone. It's Dave Barnett from the investlocalbook.com blog site. Just on my way to an appointment, and a story came to mind from a conversation that happened just a few days ago. I put up an audio clip maybe 2 weeks ago about liquidity and about the risk of being able to turn an asset back into cash if you ever had to. And I had a conversation with a friend the other day who lives about an hour and a half from where I do, and he is in the market for a house. He's a divorced guy, and when he got divorced, he moved in with his dad, who is elderly, to help take care of his father, and I don't think he was paying any rent or anything. So he's been able to save a lot of money, and he told me that he had saved up about 40 grand and was in the market to buy a house for himself and was looking for a place where his dad could move in with him. And he found this place that needs a little bit of repair and renovation or whatever, but it's on the market for 150 grand in a neighborhood where a lot of houses sell for like 180 kind of thing. So a little bit of a discount because it's got old carpets and stuff like that. So he was saying to me, I'm trying to decide if I should just put 10% down or if I should put my whole 40 grand down. And I said, well, if you put the whole 40 grand down, you will have no money left in case something bad happens. And he said, yeah, I know, but I really want to pay down the debt as fast as I can, and if I ever need money in the future, I can always refinance. And for those of you in the States, you're probably laughing at that comment, but people here in Canada still think that way because we haven't gone through the massive house price correction that you guys have down there. And so I said to him, well, let's consider things that you control and things that you don't. And I said, if you put all 40 grand down on this house, and then in a year's time you lose your job, let's say, and you want equity back out, so you go down to the bank and you refinance, your plan is dependent upon a banker at some point in the future making a decision in your favor, and you don't control that at all. It's completely up to them what they're going to do. And if you need the money desperately, it's likely that you've lost your job. And I said, how easy is it for unemployed people to get mortgages? And I said, whereas if you just put 10% down to buy this place, $15,000, you still have 25 grand in the bank. And in the future, if something happens and you need money, you'll have it. It won't depend on anyone's decision at all. And so he agreed with me. But I just wanted to share that story with you because I think that there are so many people out there who have always had such an easy time accessing credit that they almost think that credit that they might obtain is almost as good as savings or actual cash. And it's not, because things happen that are beyond our control that are going to turn those facilities on or off. I once had a credit card with a $25,000 limit on it, and I thought it was great. I was like, hey, if I ever needed to run out and drop 25 grand on something, I can. And it made me feel like I was wealthy or whatever. And one day I just got a letter in the mail saying that my limit had been cut from 25 to 12.5. And I have no idea why that is. The bank ran some kind of algorithm. Maybe I never used the limit, so they decided I didn't need it. I don't know. But the feeling that I got when I got that letter was, hey, what did I do wrong? Who gives you the right to take my money? And then I realized it wasn't my money. It was them offering to lend me money. It was them creating an opportunity for me to get myself into debt. And I don't want to be in debt. I don't want to, mortgage my future cash flow to the benefit of a bank. But I think it's easy for people to get in that frame of mind that access to credit equals wealth, when it certainly does not. Now, cash is an asset because you can do stuff with it. Cash is an asset. Is the house that this guy's going to buy an asset? I don't know. I'm sort of in the Robert Kiyosaki camp of thinking that houses are not assets, they're liabilities. In my book, I do talk about real estate assets, but specifically cost-saving or income-producing assets. Real estate, rather. So, anyway, just another example of potential liquidity risk that came up in everyday conversation. Hopefully I straightened them out. If you want to learn more about personal wealth and how to make true asset diversification and how to make superior returns in your own community without using banks or financial institutions, then you should definitely pick up a copy of my book, which is called Invest Local, and it's available from Amazon in softcover and Kindle, and it's also available for immediate download in PDF format from my blog site, investlocalbook.com. Thanks, and we'll talk to you later.